Welcome to the Leafy Podcast, helping real estate investors and entrepreneurs grow. Say hello to your hosts, Jennifer Gligoric and Brian Price, founders of Leafy Legal Services, teaching you how to protect your assets, grow your business, and manage your wealth. Let's start the show.
Hey, Leafy Podcast team. This is Jennifer, COO of Leafy Legal Services, and today it's just me. So I get you all to myself. Tammy's not here. Brian's not here. But today we have a great guest who is now under my own control. So the person we're talking today formed Red Knight Properties. He graduated from Cornell University with a degree in applied economics and management. He then went on to be a co-founder and specialized in the retail space with a vertical model that provided flexibility to serve multiple customer segments. So in his first year, he developed growth of over 110 retailers. He then moved on to be an acquisitions and asset manager, VP, and he then negotiated, managed, sourced the acquisition of $594 million worth of Class A assets. On top of that, he's also the podcast host of Discovering Multifamily. So everybody, let us welcome to the show, Andy Scandariato.
You got it, Jennifer.
I just asked him about that. Anyway, Anthony Scandariato of Red Knight Properties. So anyway, tell us a little bit about the weird, not weirdness, but so you're doing all retail, you're doing all commercial, but then your podcast is Discovering Multifamily. So tell me a little bit about your journey on that.
Yeah. So I guess I used to do a lot of office and commercial retail, as you mentioned. I was a vice president of acquisitions and helped out with asset management as well for another real estate company then, and they were specifically specialized in strictly office buildings. We had a little bit of ground level retail as well. So I actually took a step back from that. And then, as you mentioned, I'm with Red Knight Properties now, and which is my own firm. And Red Knight specializes in multifamily and mixed use commercial real estate, investment management, acquisitions, property management, pretty much full service. So and I do run the Discovering Multifamily podcast. So that's kind of how they both tie together. So we strictly today focus on value add multifamily properties where we can go into very undermarketed and underperforming kind of very properties that need a lot of TLC that are 50 apartments and up, 50 to 200 at this point, and go in there, really turn around the units, clean them up, get the rents up, decrease operating expenses, and we partner with a group of investors, and we all split the profits and make a nice return for ourselves and also improve the communities that we invest in.
Well, that's important to do that because I know sometimes economic blight, like here, I live in Galveston Island, as everybody knows. And for a long time, everyone has that in their town. Those properties that used to be really nice and now it's 20, 30 years, no one's put a penny in them. And it's just becoming more crime filled, or worse, you have an elderly community. See, we have a lot of retirees. And then all of a sudden you see the news and there's like ceiling problems and you're like, how can anyone let these people live there? But they're paying their rents. So like where I'm at, you have people paying the same amount of rent. If they just knew they could go across the street, it would be like going from a cave to a palace, and they're not going to pay a penny more. So what you do is really important. And it's also important for the people that live there as well. So what is your process with sourcing? Like, everybody knows those types of properties, but how do you go in? Like, have you ever, how do you negotiate that? So you see them and you're like, boy, that would just be so much better if they like fix that up. Do you approach them? Are they already on the market? Or do you use a variety of different sourcing methods?
Yeah, so it's a combination of pretty much everything you just said, Jennifer. So Sometimes it's sort of off market, and if it's in our local community and I'm driving by and it's an interesting property, maybe let me figure out who the owner is. Let me reach out to them. So there's been some of that. There's also a lot of broker real estate, agent relationships that we get probably 80% of our deals from, whether they are going to bring them out to the general marketplace and we kind of get them early. Because as soon as you kind of establish yourself as having a reputation, you're going to get the good deals. Because there's a lot of marketed deals. I'm not saying marketed deals are bad deals, but there's a lot of kind of early look opportunities that you can get before they take it out to the market. So your network, brokers, you can definitely try to reach out to the seller, whether that's through direct mail or just a personal phone call. In the commercial space, when you're buying, I would say buildings over 5 million, 5 to anywhere above 5 million, it's probably more effective. 90% of your deal flow is going to come from the brokerage community, in my experience. So that's been very important for us to maintain and establish those relationships.
So you would say that establishing, if you're getting into this space yourself, because we our audience are real estate investors, the majority of that, or they're entrepreneurs that are curious about real estate investing, or just entrepreneurs really, but everybody's curious about real estate now. But I always tell everybody networking's important. So if you're not a good networker, then network with the people who are good networkers. Because you have to establish relationships. Like talk about that again. Getting before market properties, you can often get a really great deal because they can avoid the hassle of it. Well, how do you find a property if they're not even going to sell? You don't want to hammer them. They're going to have to know who you are. And if you're new or you're looking for something like that and you don't want to be just by yourself, you want to do it with a team of investors, then it's great to partner up. So how did you make the leap from commercial to multifamily exactly? Like what made you decide, let me try this?
Sure. So while I was working for the other real estate operator, they were buying office buildings, I was slowly buying my own portfolio multifamily, and I was looking at the returns relative to what we were purchasing at the company I was working for. And was able to scale up kind of slowly while I was still working through a partnership. I have another partner involved as well, and I just figured it makes more sense to see if I can grow that platform and scale it and bring on additional investors and additional deals and grow the portfolio. So I think the transition from office buildings to multifamily was pretty easy. I would say office is very, very challenging, especially Class A office. It depends on where you are geographically in the country or in the world in this case. So it's a whole different beast. And I think everybody needs a place to live at the end of the day. There's an overall housing shortage. If you look at the statistics from National Multifamily Housing Council and all the NAIOP data, we need to build I think it was like 300,000 new apartment communities, like 50 units and up, to even keep up with demand by 2030. It's a crazy statistic. So what's ending up...
That is a crazy stat. Emmy, pull that stat out. I'm telling her. Yes. Because people don't realize, you look around and there is, for investors, what we do for the world is pretty dang important. We take buildings that are decaying, they're leaching all sorts of chemicals in the ground. You go in there, whether you're flipping it or you're rehabbing it and you're sticking families in. Not only what we do is great for the environment, but also it helps the homeless crisis. In some places, there's just not a place that's affordable for them to be able to live. And so what's the answer to that? To create more affordable housing, because there are people in apartments that are great apartments now, but if you build a brand new one, those people will move, and then that opens up apartments for other people to move. So it's constantly, moving and changing, and we're helping that. So tell me a little bit about the biggest rehab that you've done so far with a property where you've really taken it from zero to hero.
Yeah, sure. There's a 50-unit property that we bought in December of 2019, actually, and now it's 6 months in, and we've turned around probably 70 to 75% of the building
Wow.
in terms of getting them to market rents and completing our improvements, our capital plan for the property. There's a few structural problems that we fixed. There was, a lack of landscaping at the property. There was sidewalks that were all concrete that were completely beat up that wrapped around the whole property. We were able to put new sidewalks in and then put nice pavers down in the courtyards, which made a huge difference in the curb appeal of the property. There was a really old monument sign that was falling apart. You could barely read the phone number if you wanted to rent an apartment. We replaced that. We put a nice new monument sign there that's like basically stone with a nice new sign on it that's clear and could probably really never deteriorate based on the material that we got. And then a lot of interior renovations. So we've renovated pretty much most of the kitchens that needed to be done. Flooring. There's a lot of carpets we had to rip up.
Do people even get carpet anymore in apartments?
No, some people like it in their bedrooms.
Yeah.
But we usually use this nice waterproof based laminate flooring kind of universally. So we've had to do a lot of that. So that was a big, I wouldn't call it a huge rehab, but it was a lot of units basically at once that we had to figure out. We didn't have to figure it out at once, but we wanted to execute very quickly on our business plan.
Yeah.
So we were able to at least be in the right direction and be very close to completing. So.
Yeah. The good thing about that is psychologically, it also drives more people there. They're interested in it. So other people who are like, I'm sick of this place or whatever, and they want to make a move, they're like, ooh, look what they're doing. When you have a lot of work and construction going in, they see a new sign and they see a lot going on, that also generates interest from people that are going to be generally in the market in a couple of months looking for a more freshened up, nicer place. So that's smart when you do it like that, rather than just try to piecemeal a little stuff. A lot of activity generates interest just by having activity. It's some of the best advertising you can get. So yeah, that's really smart. So tell me a little bit about the future. So we're coming out of, we just are in chaos right now. It seems like, of course, the world is always like chaos, and this will be a blip. In 2 years from now, we'll be going on to the next big thing. But for right now, we've had chaos in the rental space. We've had a little bit chaos with people with mortgages. Tell me about how your company is dealing with that for your investors and what your plans are for the future.
So we've been pretty fortunate in terms of our collections. So for April, we were like 97%. May was actually a little bit better. We have, I think I don't know if I mentioned, about 140 units in our portfolio. We're closing on another, call it 120, 130 in the next couple months. So, it's, I think we plan that we were going to have somewhat of a recession going into these deals, and we're able to buy these deals at discounts relative to what we thought the recession was going to be. So fortunately, we didn't really get hurt. I'm in northern New Jersey, which is very close to New York City for your listeners. So we kind of invest in an hour to 2 hours outside of Manhattan, where the rents really, really drop off. I would say if your rents are much different 15 minutes from Manhattan than 30 minutes from Manhattan. They're like cut in a third. And then if you go out even further, they're cut in 3/4 pretty much. So we always know that there's going to be some demand just because of proximity to New York. So we've always kind of invested in the workforce housing, kind of B-class properties with, I would say blue collar demographics, which, as a statistic I mentioned, that type of housing is lacking even before COVID-19, even before all these riots going on. So it's just going to get even more supply constrained. And, these new developers in some of these areas aren't going to be able to hit the rental rates that are needed to serve that demographic. So we've been pretty fortunate in June. It's June already, and June's rents are coming in pretty strong. So we've been very fortunate. And like I said, I think we planned for it. We planned for something was going to happen. We didn't know what it was, but we knew it was going to happen, and we didn't want to buy at the top.
Mm. Well, that's very smart. So now things are stretching out longer than anyone thought that they would, right? As far as up north, down south, we're open. I went to Ulta this weekend. It was great. And I feel bad for you guys that you can't do it yet.
Sure.
But now you have the riots, and now you have this political instability that seems to almost want a great recession. It's almost like the will of the people. In some ways, I feel like we all want to go back to work. We all want to find a way, make a way. And it almost feels like we're being told, no, we have another plan. So
Jennifer, this is a whole nother podcast we can
it's a whole other plan, right? So, but for your plans, when you see something like this from a top level business and you're like, okay, this is stretching out longer, what are some like on the ground things that someone can do if they're, just talk to the people who have duplexes or quads, or, do they have some plans going forward with 30 some odd million people out of work? Not everybody's going to be hitting those 97% rents and all of that. What are some things that y'all have talked about to work with renters who may just be getting hit right now? Their work thought that they could keep them or bring them back. So they were proactive and maybe lowered hours or lowered things. So they've been eking through, and now they're being told, yeah, it's not going to happen. And we've seen that in some areas of the country where people were expecting, they were being told they would come back, and now they're being told no, and they are out, So what are your ideas for that? Like, give us some tips for the littler guys, I guess.
Sure. Yeah. I mean, if you're having, if you own a 2-family, 3-family, 4-family, whatever it is, and, you have tenants that are struggling to pay and are losing their jobs, I would say, see if you could work out a payment plan with them. Make sure that they're, getting back on their, trying to find another job. I know right now we're recording this in June. There's really no courts that are open, at least in the Northeast. Courts are going to start to open up in July, from what I've been hearing. Not soon enough. So it's hard because you don't want to file an eviction because you feel bad, and it's I would take the emotion out of it. That's also a tip, because there is somebody else that's going to be working if you eventually do have to replace that tenant. But in the meantime, I would just remain a little compassionate. I know it's hard. It's hard for everybody right now, and see if you can work out some sort of payment plan. If it's the first of the month and the rent is $1,000 and they can only come up with $600, okay, that's fine, $600, and then give me the rest, in the middle of the month. Just work it out with your tenants. It's not the end of the world if they don't pay the full amount. We've had some tenants come to us that have had issues too. We were thankful that it hasn't been 50% of our tenants. It was only like maybe 5%, not even. So, I would say just be open to working with people and getting through this, because we will get through this.
Yeah, I think that's a good idea, because also too, coming from the asset protection standpoint, the lawsuits, we're monitoring it. There are entire attorneys now who are targeting real estate investors and different types of investors. So as far as the people who are not working with their tenants, or they're trying to target people who did receive PPP or EIDL funds and did not immediately put that back into tenant forbearance plans for them. So you want to make sure that you look at what's going on in your area. Just Google it if you have to, landlord won't do this, and see what's happening, because the last thing you want to do is, if you as an owner can eke it out a little bit, is to be too aggressive, and then you get hit with some class action lawsuit from every single one of your tenants who say that you didn't work it out, you received federal funds, you were supposed to do that on your end, what's going on with them. There's a lot that's going on, and it doesn't have to be that way. So I'm going to tell you, just be kind and compassionate, but also let them know that you two have a business, and what can we do to work it out?
Sure.
That and those written communications where you tell them, look, this is what we're doing. This is what we're trying to do. This is what we need from you guys. To anyone who is struggling, write it down, have a paper trail, show compassion. That is very important. The last thing you want to do is get drug into some court, some he said, she said, and then you don't have any paperwork to back it up, or you were way too aggressive when you're not supposed to be. So those things are important. So I'm glad that you said that, because there are many ways to treat people like human beings, understanding their situation, but at the same time, you're a human being too, and you're allowed to be respected too, as someone who's an investor running a property and all that. Sure. Okay, well, we're getting to the end of our segment here, but we've been having a great time. We've been talking to Andy Scandariato. Right? Scandariato. Yep. Why am I having a hard time? I'm usually the best with names. It's because Tammy isn't here. She's usually the one that jumps over the names and not me. So Anthony Scandariato. And Anthony is with Red Knight Properties. And Anthony works with investors all the time. So if this type of investment, if you're like, ooh, I would really like to do that, or I'm in that area, understand that market, just go to redknightproperties.com. And if you even go to /invest with us, you'll learn a lot more. So sure. Anthony, before we go, is there anything that you would like to leave us before we end our Leafy episode here with our people?
Yeah, Jennifer. So you mentioned our website. You can actually also download, as soon as you go there, you can download our special report, which is how to be financially independent after leaving your 9-to-5. So you can actually just put in your name and your email address, and you'll get a free, it's essentially a free ebook. So I
love free things, and I love informational ebooks that can teach us all how to leave our jobs and to make more money. Sure. And to do that. Is that in retail or just multifamily?
It's actually through any type of real estate.
Oh, so good. Okay.
Catered towards multifamily for sure.
Okay, awesome. Well, thank you so much. Okay, so Leafy Podcasters, this is the end of our episode. As always, you can go to iTunes, Spotify, Stitcher. If you type in @LeafyLegal, we'll pull up. We're everywhere @LeafyLegal. Please leave us a review. The reviews are what helps us get out to everyone. We love our reviews. And go get your free ebook from Red Knight Properties. So anyway, thank you again, Anthony, and I hope everybody has a wonderful rest of your week. Bye-bye.
Attention real estate investors and entrepreneurs. Did you know that real estate investors are a primary target for lawsuits? According to the National Survey of the Court data, 25% of Americans risk being sued in their lifetime. However, if you are a real estate investor, you have a 95% chance of being sued in the next 20 years. Leafy Legal Services helps you protect your assets and strategically grow your business and wealth. Leafy Legal Services are experts at the Series LLC and Delaware Statutory Trust, two of the newest and most ideal legal structures for real estate investors. Leafy Legal Services have the most personalized and affordable solutions for setting up LLCs. Property owners are always at risk when it comes to their assets. Anonymity is so important. If you own just a rental house and you own your home, you have to protect yourself and your properties from any potential legal issues. Leafy Legal Services have the right solutions to make sure you are happy and feel secure. They offer cost-effective documentation that suits their clients' needs. For a free consultation and ebook, visit LeafyLegalServices.com. They are waiting to hear from you. LeafyLegalServices.com.
Follow us on Facebook, Twitter, and Instagram. Don't wait. Take action now. LeafyLegalServices.com. Protect your assets, grow your business, and manage your wealth.